On today's Breaking Views, UK house prices look rather expensive, like German bonds, and why Monty de Paschi's cash call is a new sign of desperation. Robert Cole, Reuters Breaking Views assistant editor, joins me now. Robert, let's start with UK house prices. They're going up, but they're nowhere near the sort of bubble territory that we saw 5 years ago.
No, but they haven't fallen as much as might have been expected either. You know, house prices in the UK are, one of the most important factors driving them is a real shortage of supply. And that, although you're right in what you say about the prices having weakened, means that, house prices are pretty strong and indeed remain strong. And if you look at the sort of measures of multiples of income, which is a very good way of looking at any valuation, they're right up there actually with what has gone over the last few years. And that's surprising because you would expect, with the kind of economic slowdown that we've seen in the UK over the last years, those multiples would actually fall back. They're about, four and a half? You might expect them to fall back towards the longer term average of three and a half. But the point here is, of course, this is another one of these QE stories, right? So that there's lots and lots of money sloshing around. Not so much in this case the QE being the factor, but being very, very low interest rates. So those who have money have been able to, and can borrow it, have been able to borrow at very, very low rates. So that the affordability of housing, in terms of the mortgage rates, has remained quite low. So that's good stuff in many, many kind of ways, but it does build up some possible problems for the future.
But isn't this a good thing, though? I mean, wasn't this the aim of QE and government and central bank stimulus, is to get asset prices rising, especially house prices, people feel wealthier and start spending again?
Well, yes, I do have some sympathy with that, and I do actually take a little bit issue with Ian's piece here, because I'm not so sure that house prices, as he says, are as vulnerable as perhaps some people could think, partly because of this supply issue and partly because of this sort of somewhat illogical but not entirely ridiculous thing that Britons have about wanting to own their own homes. It's not ridiculous because, well, very, very broadly and simply because, when you retire, it's good not to have to pay rent, and therefore owning a home is a part of your retirement planning. But it's also nice to have, and houses aren't just an investment. If they were just an investment, I'd have more room for sympathy with that view. But
Ian's piece, he makes the connection, and he draws the analogy between UK house prices and German government bonds.
and UK government bonds, and indeed by extension US government bonds.
It's kind of commonly assumed or thought that government bonds are in a market bubble, and it's been 30 definitely. Years in the making. Would you say the UK house prices are in that same sort of...
Well, the correlation is or it's very hard not to see the two in the same kind of breath, because clearly they have been going up very, very strongly, and they are at prices which makes you think that there can only be one way for the future, i.e. down. But whereas bonds are, if you like, a pure financial investment, housing isn't, residential housing isn't, and I think that is a difference which might actually come to the fore.
Finally, on this one, very quickly, which one's going to burst first? Government bond bubble or the housing bubble?
I think the bonds are much more vulnerable.
OK, on to the Italian bank Monte dei Paschi, of course the world's oldest bank. It's been mired in scandal these last few weeks and months. They're planning to increase their capital raising plans by €1 billion to €2 billion. How is this bank going to do that?
Well, let's be clear. This is rumour. This is speculation at the moment. I mean, pretty well-founded sources' stories, but these aren't firm plans, and so we're still in the sort of ideas generation phase. But one assumes that it will be via a rights issue, and yes, it's a sign of desperation. But actually, I think that the way this piece is moving towards is actually it is desperate. But there are some really quite significant silver linings here in terms of the way Monte dei Paschi realises that if it is to raise this capital, which it needs, is to raise more capital than perhaps people otherwise thought, it has to update itself. Monte dei Paschi, as you probably know, Jamie, is the world's oldest bank, or at least it says it is. Mm-hmm. But it's not. It's also one of the world's most old-fashioned banks. Has a rather arcane shareholder structure, and And we are led to believe that as part of this capital raising structure, the corporate governance structures will become more conventional. That will make it more attractive as an investment proposition, and may make it more likely that it will make it easier to find the money as well.
That's a pretty bold undertaking, though, isn't it?
Exactly. There's no way this is straightforward, and so perhaps one should classify these as sort of glimmers of hope rather than.
We'll take what we can get, Robert.
Absolutely.
Robert, thank you very much. That was Reuters Breaking Views. Robert Cole, and for more agenda-setting financial insight, watch our US Breaking Views show every day at 12:30 Eastern, 16:30 GMT. I'm Jamie McGeever. This is Reuters.